All right, traders, BA here with your TTB report for November 20th, 2018. Hey, I gotta tell you, man, this action is crazy. I put out in the email this morning that if that level did not hold, good probability that we go down and test those lows. It looks like that's what the S&P wants to do. The Nasdaq's already taken out its most recent low, tried to close back above it today and lost it again. So we're gonna start with the S&P and just show you a couple of things here that I'm looking at. Guys, this pattern right here, down, up, it's a very tricky pattern. This move that it's making right here, if it goes down and takes this out, this is a very normal pattern that repeats itself in every time frame. You can look at the smallest, most minute time frame, and that pattern is there. That is typically what completes the pattern. Whenever this thing pushes down, takes out this low, the game that they play, they'll run the stops below this low because that's where everybody's thinking the world's going to come apart. They get everybody short and then just rip it higher, and that's the end. The end. That's generally how it plays out. I've played these patterns for decades, and this has been one of my favorite. Once you get on the back side of this right here, this is where I always start loading up. We get down, I'm very tepid right now because I think we're going to get lower prices. I want to add prices below that low right there is what I want to do for the January, February time frame. The snapback rally from this is going to be huge. Believe it or not, this is actually good for a rally. Now I hate the way it's unfolding because I still think it's politically induced. I think if this trade war stuff would have been resolved, back in the earlier part of the year, I don't think we would see this kind of action right here. No, I don't know what's really causing the action. You're just listening to my opinion. I don't know anything. Nobody else does either. But I will tell you, the one thing I do know are the facts, and the facts are this is the most volatile period I have ever seen. It's one of the top 3 most volatile periods in the history of the stock market. These violent moves that we're seeing right here, they don't even measure up to the 07, 08 period. There are only a few times when the market was just absolutely crazy in 07, 08. This certainly whips it by a good margin, and when you compare the problems we were in with where we're at right now, there's really nothing structurally wrong with the market from what I'm looking at. Now, I will caveat that by saying that there is always something brewing underneath the market's fundamentals. And at some point in time those cracks come out, but we still got plenty of room to maneuver in the yield curve, jobless claims, all of the fundamental factors that drive the market. They're just not at capitulatory levels. So that's why I'm still holding to my guns that this is just a correction, and once it flushes itself out, we're going to resume the normal bullish trend. But it's always like this, always doubtful. Everybody's always panicky. The world's always coming to an end in this type of environment right here. I just don't think it's ready yet to roll over to a 40% correction. Unless something breaks inside the market, if we have another debt implosion, if that were to happen to come out, then I could definitely see it. But guys, the market fell apart in 07, 08, back when the market was around this level right here. The housing bubble was starting to crumble. It was looking very, very terrible, and Greenspan and the Federal Reserve and the Treasury guys were all saying everything looked really, really good. There's no cause for concern, but the housing market was breaking at that point. There's nothing come apart in this right here other than the trade war debacle and just the hint of interest rates creeping up, which this is a typical reaction. Not this, but something like this is a typical reaction to the interest rates. Anyway, that's just some of my thoughts on the S&P. So I still think we've got to come down here and clear this out. I would be really surprised if the S&P turned from here and ran higher. I really would. That would shock me. It would catch me off guard, and I would not know how to take that. But I trade levels. When market gets down like this right here, I trade against the levels that I project in the marketplace. So that's what drives me. So I start putting those levels out. Now this is the NASDAQ, and this is what I'm talking about. We go down, we come up, we make that push down right there. So you see here that this is the low I'm referencing. NASDAQ came down. It tried to get back above that low. It couldn't do it. Closed down below it. So that leads me to believe it's waiting for the S&P to make its mark. No matter what the NASDAQ does, guys, it'll always lead the S&P. But the S&P is the market that's got to complete the pattern. I mean, that's the trading market. That's what everybody in the world cues off of, is the S&P. Traders follow that, even though the Dow is always quoted. It's traders follow the SPOOs, as we call it. So anyway, that's the NASDAQ. Here's the Russell. Russell hadn't quite taken out the lows yet. I expect it'll take out the lows before it's all over with. So no issue there. Let's see what the Dow looks like. Dow looks kind of like the S&P does. Still think it's got to come down and take everything out as well. So, and guys, just we're a long ways away from being bullish enough to take positions in the stock market for short-term momentum trades. If you're accumulating for longer-term positions, let's say you want to go out 6 months, there's nothing wrong with you putting on positions here, guys. Nothing wrong at all. In fact, this is a beautiful way to do it. I'm just holding out for lower prices to put my other positions on because I think it's going to get down there. All right, crude is just a fascinating market to watch right now. I have not seen markets come apart like this. The stock market, the crude market, in not together forever. So it's just really fascinating to see these things come apart. The crude market is just now starting. I looked at some, let me see if I can pull up the, when we start getting like this, I start referencing other models I have. So I like watching the volume model I have. I'm looking for formations like this. When we come down, we create this low, we rally up, we come down and make a lower low in price, but we make a higher low in volume. The same with the RSI here. So those divergences are what cues me into a potential trade to the long side. It's part of a key component to our bottom picking model is that divergence right there. I love that. Crude has just had a unbelievable move to the downside. Unbelievable. Let's look at the gold market. Gold is holding. It's not rallying. Nobody's flocking to gold as a safe haven. So I don't know what to make of that. You know, let's take a look at crap. I forgot what that symbol was. Well, I can't remember that symbol, guys. Let's just look at bonds and see what bonds have been doing. You would expect bonds to rally smartly while the S&P is going down. We had one big up day, and we're flagging at the top here. There's a good possibility if we get a panic move in the stock market, and I mean a push below that low, bonds could lift aggressively. I would love to see that. A panic move down in the stock market, clearing out those stops below the 2660 low, and the bond market just wreaking havoc to the upside. That would set us up for several good trades. We could trade, make bets on lower interest rates out the February-March time frame in TLT. That's what you need to be watching for in this type of setup, guys. Start posturing yourself for some moves 3, 4, maybe 5 months out. And this is a sure thing right here. They're going to lower or raise interest rates again, and that means it's a certainty that the bond prices are going to go down. So if we could get a panic and get money flocking to the bond market in a panic move down in the stock market, it would be the perfect setup for us. So we'll be watching that, watching for a trade in TLT or in Treasury bond futures, whatever you like to trade. All right, that's markets that rule the earth. Now here are some, I just love this little scan I do with, shows which stocks are above both of these VWAPs and which stocks are, you know, twice as volatile as the S&P. So let's take a look at those. AAOI. I don't trade AAOI that much, but I mean, look at this thing, guys. It's holding right in there. The volume model looks really good. We're going to look at a couple of studies in this. I mean, look at the 15-minute chart. It's barely above both VWAPs. It's not completely bullish yet, but I'd say a move above, you know, 2015 in this one right here. We'll just put an alert so you can see what I'm doing, what I'm looking at. You know, move above 2018, and this thing's probably going to go up. I'm going to tell you, the snapback rally from this market right here is going to be a doozy. I mean, some of these other stocks I want to show you. Oh my gosh, it's going to be unbelievable. So just try to keep your powder dry and be ready, because it's going to hit when you least expect it. Could come back tomorrow. I mean, this move that we're seeing in the stock market in the most bullish week of the year, I mentioned that it's one of the top 3. It's the most consistently bullish week of the year leading up to Thanksgiving. For this market to get walloped the way it is just unprecedented. And I will tell you that we could see a snapback rally tomorrow and Friday, like with the likes of you have never seen. So you just need to be ready for it. If you can watch the charts closely during the intraday time frame, you might have a very good 2 or 3 months inside of one trading day if you can catch these things on the move up and above both of these VWAPs, guys. Hey, trade them hard, man. The snapback rally, trade them hard above this level right here and use those as your stops. If the market reverses, just take your lumps, get out with a small loss. But just be ready. I mean, been in this game for a long time. I know how the market tends to fool everybody. ACAD. ACAD's been holding up pretty well. I do not ever want to take a that's a pharmaceutical, so this one could rally. This one's actually holding up pretty good. So you can see here it's bullish on the hourly. It's above both VWAPs, but I like seeing the short term above the long term. But I will tell you here in this market, guys, in this market, yeah, I'm going to take this off right here. Let me take this study off. Yeah, stocks that are holding up like this right here, you know, this one seems to be holding up. You know, half back is a very important level, and this one seems to be holding up about half back on that large bar right there. So that's really bullish in this environment right here. So another stock to watch. Okay, this one opened down about 189 bucks, rallied all the way up to 210 today. Huge move. Look at this bar up right here, guys. This one's almost crossed. So in a market like today, when you see some of these stocks that are powering back, there's some buying going into these babies, and guys are recognizing that this possibly could be the last buy that they ever get before, you know, the next 18 months is over with, you know, at these levels right here. So I am fairly certain there are people loading up with some of these plays. AMD, another one that's, you know, all these stocks have something in common. You know, they opened low and rallied really strongly today, and they're all above, you know, both of the VWAPs. Again, I like to see the short term above this one. Let's see. Yeah, above 2003 could be a good play in this one right here. Let's go back to a line. I don't think I put a marker in on that one. Yeah. Somewhere above 214.30 in a line. Let's look at IONS. Wow, this one's right at the highs, guys. This one is not bucking at all. It's bullish. You know, we almost have a cross right here at, you know, above 54 in this one. And I put 54.48. We'll move it back down. All right, 54.25. We'll go a little bit lower on that one. If you want to play Nectar, a lot of these are pharmaceuticals, guys. There may be a reason for this. We've got, this one is still good. This is still valid right here. I mean, look at this one. It's hardly budging to the downside, guys. Just a really nice play. Look at NVIDIA. NVIDIA came back. Nice bottom, potential bottom area right there. Huge move back in NVIDIA. Went all the way down to 133, closed at 149.08. I mean, just an incredible move back up today, guys, on some of these. They were so over. Some of these stocks opened down 10-15% on the open today. I've never seen this kind of gappy trading. I've seen it before, but not to this level that we're getting, that we're seeing every day when the market opens. Down 40 handles today in the S&P. The other morning 20-some, 30-some. I mean, it just never ends. The good thing about that, those gaps are going to close when the market goes back up. It's guaranteed. All right, SRPT. We've looked at this one several times. This one looks like it's trying to hold as well. That's still a good level for SRPT right there, even though it's, you know, $3 and some change above the marker is. That's still a good run on this. It's bullish right now. We're green. We're above everything. This one is actually above all. If you wanted to take a stab, if you could watch the markets and this one moves above these two swing highs, hey, go for it. If you're in there able to watch the market through the intraday time frame. Zillow Group, trying to paint a bottom right here. This thing just continually tries to pick a bottom in the Zillow Group. So this one's crossed over too. Maybe it's had enough. Who knows? I would prefer to see another little down leg in Zillow Group before I got involved in this one. That probably means that it's going to run up to about $40 a share tomorrow, but I would prefer to see a little bit of pullback, especially any of you that have the trend paint bars. You see a little red on this one, it turns back green again. That's the green light to hell's bells to the upside. So let's take a look at some of the big stocks that we follow. I'm not going to go through everything, but just to give you some ideas of what we're looking at. Apple has just been freaking slaughtered. I mean, if you wanted to put a long-term position on stock, make a bet for a move upside, hey, that wouldn't be a bad one to do. You could, I'm going to look after this and come up with some trades that might make sense, that are really, really low cost, that we could put on in Apple. But I'm telling you, the snapback rallies, when they come, they are going to be monumental. Yeah, this is creating quite a big pull down, and at some point in time it's going to release, and that release is like, oh my gosh. Let's see what Facebook looks like. Facebook opened way down today. It had enough. I mean, when they open down like this, guys, and then come back and take out the open of the prior day, it's kind of like, oops, we might have overdone things. So it's worth watching. And again, this stock is really close right here. Stocks like this, if you're watching them intraday and you got real-time data and you're watching these things unfold, especially if you have the paint bars, these things take out the high. You don't really need them. You just trade off your VWAPs here. A move above this swing high right here at say 134 and some change. You pick a spot there, go with it intraday if you can watch it, and just close it out if it reverses and gets back down below both VWAPs. See what Google is doing. Oh, let's see. Google might have had enough as well. It's a nice pattern. You know, there's probably about 5 or 6 stocks I would watch tomorrow if I were trading intraday. If we got moves above them, I would you know, divide my money up, you know, into about 4 or 5 stocks, and set back and trade above those swing highs. Then use the VWAPs, the lowest VWAP that you have, as my exit point in case I'm wrong. I will tell you, we're in an area where the market could rally. I prefer to see the S&P go down and take out the stops below 2,600. It would surprise me if it turned around, but we have to be ready for the mother of all snapbacks. Okay, guys, that's all I have for right now. Remember, if you trade them to the long side and you're short term, make sure you're watching these things closely intraday, because they can turn on you in a heartbeat. And the most important thing now is conserve capital for the turn in the market. If you're accumulating for longer positions, now is a perfect time to do that. I'm holding to see if we get a move down below 2,600, and then I'll start putting on positions for January, February, March time frame. In UPRO, TQQQ, things like that, some of the energy plays we're looking at. Let's look at one of the energy plays, ERX, see how it fared today. So yeah, you could get back in and add to ERX. You know, we're looking for higher prices there by January, so that's a good one to put on. And you could, let's see, MRO was looking pretty good. It never triggered in, so we're going to take that alert off right there. Let's see how RIG did. RIG crushed again as well. VLO, they all just got clobbered today. So alright guys, that's it. Be prepared too for a big rally in the energy sector as well. So that's all I have. Hope you guys have a good trading. If you guys are taking off for the holidays, hope everybody has a nice Thanksgiving with family and friends. I'll still be putting out my nightly stuff tomorrow, and you know, getting everybody prepped for Friday's trading. So this is BA signing off.